Okay, this is the ProShares Trust Ultra Short S&P 500 that we have talked about many times, and we talked about, why it would have to go down. The markets would go down in the S&P, so as the S&Ps went down, and here's a perfect illustration right here, down 29 handles, and I'm up $2.35 on the Ultra Share Trust. It's a 500. It's an ETF. And there's the S&P. Once the S&P breaks below the 1088 handle, there's no more support until you get much lower, which would take this Ultra S&P 500 much higher for Tammy, Ray, and Scotty can all rejoice in this weekly chart. So basically on the weekly chart, we had a major bottom on a weekly support level right here. We broke out up to $40. There's still a long ways to go up. And this is a weekly chart, but it's the beginning of that confirmation. And they're tradable daily, and you can also do many things with them. Let's show you what a daily chart looks like. This is the gap on the daily. And the thing about it is that this was the last wonderful breakout. Let's draw a trend line right there. That's the breakout. So when the market sold off in its last little bout, this is how we broke. And this is the beautiful thing about being able to be short the S&P. If you're not shorting it this way, like we are on $1,100 index puts on the S&P, they cost a lot of money. And so because one contract is $30, that's $3,000. If you have 10 contracts, that's $30,000. Well, you could come right over here for the same $30,000 and buy 1,000 shares and make $2,000 with a lot less capital and still be involved on the big downfall of the S&P. Where your financial pundits said that we were going to 1350 on the S&P, that there was nothing wrong with the economy. I sure hope you didn't buy into that. And if you did, I hope that you remain coming back to SMF Street. We're not going to steer you the wrong way. We're not out to pump and dump stocks and, talk up positions. We're here. We're long. This was it. This is what we told. Go to SMF Street. Go look at our index options. We got lots of videos. We do this all the time. We told the public to go to cash before that gap. Yes, we did. So basically on a daily, there's the gap. Here's the turnaround right here on that number. One of the things that we're liking about it is that when we close up above there, the S&P keeps selling off and we start getting support up in here at higher levels. So if we get a closing price right over here where this breakout bar started, that's where this breakout bar, they gapped it up and they kept running it. It consolidated, they gapped it, and they ran it. Well, what we'll be looking at here is that we are fully enjoying the position now because it's a great position to enjoy. The 10 minutes starting to flat out on a daily. It's above the 20-day. And basically what it did was that gap down right here is that you got the same invert gap back up, which is bullish. And then we consolidated the move down here for a number of days. As all the bulls were getting in the market, we knew that this was the trade. And we enjoy it. That's the daily move.